Good afternoon. The Thursday, December 9th, 2021 meeting of the Committee on Finance and Administrative Services is now called to order. Will the Chief Advisor please call the roll?
Trustee Williams,
Present.
Chair Massey,
Here.
Trustee Basil-Holt.
Present.
That's it.
I'm on the line. Trustee Swanson,
Trustee Swanson.
here.
Thank you. Sorry about that.
Okay, thank you, everyone. Good afternoon. Winter has come to Chicagoland. With the landscape coming alive, we can also celebrate the continued distribution of the COVID-19 vaccine. I hope that everyone has gotten their initial vaccines, and those of us who got our initial vaccines 6 months ago have gotten a booster. I want to welcome everyone to our third in-person committee meeting. It is great to be back. I don't know why they gave me this. I'm gonna try not to let this go to my head, but I've got a gavel. Woo-wee! In a moment, Chief Financial Officer Rodriguez will be giving a financial update. We will also have two presentations today, one from our external auditors and the other from our CFO Rodriguez. We will also review the board reports that will be considered during the October regular board meeting, which will take place later this afternoon at 2 p.m. CFO Rodriguez, you can proceed with your presentations.
Thank you, Trustee Williams. Good afternoon, trustees, chancellor, and officers of the district. Welcome to the December 9th Finance and Administrative Services Committee. In today's meeting, our external auditors, RSM, will do a presentation on CCC's FY21 financial audit. I will also present the FY21 audited operating financials, as well as the FY22 first quarter preliminary financial forecast. I will also be joined by AVC of Financial Aid and Scholarships, Richard Hayes, and District Director of Student Finance, Aretha Tharps, to provide management responses to the audit findings presented by RSM. Team, including campus operations and district office staff, for all the hard work in completing this year's audit for a period which was predominantly in a remote environment. Thank you. With that, I'll turn it back to Trustee Williams.
Let's see. So, are we going to do the? Yeah. So, you can go ahead with the presentation, right?
Kelly, if you can come up from RSM, thank you.
So, all good? Okay. Good afternoon, everybody. Oh. I guess. Sorry. Oh, turn it on, right? Oh, no. So just point it this way. Oh, okay. Okay. Good afternoon, everybody. My name is Kelly Kirkman. I am a senior manager with RSM. Over in the audience is Joe Evans. He is a partner with RSM as well. So as Maribel mentioned, we're here today to just give you an update on the 6/30/2021 audit. What's on our agenda today is to review the audit process, go over a few of the required communications to the Board of Trustees, talk about some internal control issues, and then also go over the single audit. As I mentioned, Kelly and Joe, the rest of your engagement team is here on the screen. No significant changes, so our manager, Ronnie Christopher, was the manager last year, and the same with our in-charge. We also do utilize 2 subcontractors in the audit, Prado and Renteria and Bedford Brown. The scope of services, so this is a little hard to see, but the annual comprehensive financial report, so that was issued and completed back on November 29th. Just one thing to note, it was 1 day earlier than last year, so definitely a little bit of an improvement there. There are, while the financial statements are issued, there are, a long list of deliverables that we do, present as well. A few delays that we're going to talk about. So there is an examination of your enrollment data with the Iccb. That's actually pending. The Iccb had some technical issues, I guess, this past year. So they've extended that deadline till March. So that piece of the engagement will be completed once they've done their piece. Same thing with some grants that are, issued through the Iccb. We've completed the testing at this point, and we're just waiting to issue and finalize those upon certification of the enrollment data. There are other standalone grant reports, 2 of them, Youth Scholar Skills and Re-Enrolled Project, that was also issued in November, and the same thing with your Youth Connections report. So everything, financial-wise is done and issued except some of these outstanding things with the Iccb. The single audit report, we have been waiting to finalize the single audit report upon issuance of addenda from the OMB. So they issue guidance on, the regulations and, different compliance requirements that we have to test. That was originally supposed to be issued in early fall. It just got issued on Friday. So talking with, management earlier today, we're hoping to be able to finalize and wrap up the single audit report. So the report on all your federal funds, hopefully next week. So to briefly go over our responsibility with the audit is to make sure, we're expressing an opinion on your financial statements. So the financial statements are the responsibility of management, and then it's our responsibility to express an opinion on those. So we're planning our tests. We look at tests of details, tests of controls, to just gain assurance that the financial statements are free from material misstatement. Happy to report that on the financial statements, we did issue an unmodified opinion. So what that means is it's a clean opinion, it's the best opinion you can get, and it's also consistent with prior years. So no issues on the financial statements to bring up. Oh, I think I'm paused again. Okay. So this year, some significant issues that were discussed with management. I think, no surprise, but still dealing with the impacts of COVID. So as Maribel mentioned, the audit was done in a hybrid environment. We were remote at the beginning of the audit, and then towards the end, we were coming in person for some of our wrap-up testing. Overall, I think it was, pretty smooth. There was significant emergency relief funding this year, so all of the HERF and the GEAR and the MSI funding. Here we've listed out just so you can see the amount of expenditures that, the colleges did have. It's a lot of money. So, over the course of 21, you gave out almost $21 million of student funding. So money that, you filtered out and got directly to the students. There were also institutional portions related to that as well, so $32 million. You'll see in the next slide, some of that is revenue that you were able to recapture, but other of it are expenses that you made that had to do with the COVID environment. And then the same thing, 2 smaller, but not less important pieces of that funding were the MSI piece and then also the GEAR piece. As I mentioned, we have been waiting for this supplement to come out to finalize the single audit. That was done on Friday, and we should be able to get that wrapped up next week. Then wanted to bring your attention just to talk a little bit more about that institutional portion. So in total, you drew down $32 million of expenses, and that was really divided up into 2 pieces. So one of the pieces that the emergency funding let you do this year was to go back and reclaim lost revenue, essentially. So, COVID had an impact on 2021 operations, and so the feds addressed it with this revenue by letting you go back and look at, what was your average revenue that you did in the last, that you received in the last 4 years, compare it essentially to what you, what you had in 2021, And then the difference there, you were able to claim and, use that as part of your HERF funding. So, management did a very in-depth analysis, looked at it by campus, looked at tuition, by campus. And ultimately, in 2021, you were able to recognize about $17.5 million of lost revenue. The remaining $14 million were expenses that the colleges had related to coronavirus. So equipment, payroll, indirect costs, and computer software. So any type of expenses that were related to the disruption of services based on coronavirus, you were able to recapture as well. Within the financial statements, one thing we just like to bring to the committee's attention is that, there are estimates in there. So estimates are, just areas that take a lot of management judgment or, estimation, things that you should just pay attention to. Some of your larger estimates have to do with your accounts receivable allowance on your student balances, the valuation of investments, property taxes. There's some big liabilities out there related to OPEB and workers' comp and IBNR. So all of those have a lot of assumptions and estimates built within them. And then also the liability with SERS and overall depreciation. So just a handful of estimates that could have significant impacts on the financial statements that we'd just like to bring to your attention.
I'm sorry, I have a question. Were there any changes in methodology for judgments and estimates?
No.
Okay.
And within the letter, you'll see, you probably should have it. It's a PDF. Towards the end of it, we list out what the significant estimates are, what management's process was, and then, whether or not, what we did to test it and if we had issues. So with those, we had nothing, and there were no changes from the prior year.
Thank you.
One change, I guess, from the prior year was there, in 2021, the college had to implement a new accounting standard. It's called Gatsby 84, and what this has to do with is fiduciary activities. So essentially what we had to do this year was, the college has a student activity fund, so cash that is owned really by the different student clubs. However, this statement, because the college does control it, required that money and activity to be brought onto the college's financial statement. So very small impact, but there was a restatement for about $1.4 million just to pull that information into the financials this year. We did have a few minor audit adjustments, which are attached to the letter as well. Really nothing significant, nothing that rose to any sort of significant deficiency or material weakness, just some reclasses with revenue and things there. Past adjustments, no adjustments that we came across that management decided not to post. And then a few other of our required areas just to make sure we know about or make sure we're talking to you about with is that we believe management selected the most appropriate accounting policies in areas where there's judgment. There were no alternative treatments discussed. We had no disagreements with management. There were no consultations with other accountants. And other than the impact of COVID, there were no significant issues that we discussed with management during the audit. And then finally, no significant difficulties. And then also letting you know that that report to the Board of Trustees that you get, it does have management's representation letter attached to it. And really what that is, it's a letter prepared by us essentially saying management provided us with all of the information that was out there, and then there's not anything missing. So then a recap of some of the internal control and compliance observations that we had during the audit. As I mentioned, for the financial audit, there were no material weaknesses and no significant deficiencies. So this was the same in 2020, 2021 and 2020. So no internal control issues on the financial side to bring to the board's attention. For the single audit, so this year, as you can imagine, the program that we tested for single audit and federal compliance is really the Education Stabilization Fund. So all your HERF, GEAR, MSI, all of that money is what we tested for the single audit. In addition to that, we also had to follow up on any prior year findings with student financial aid. So as you can see, I guess I want to preface this before we go into it. We did have 6 reportable issues for the single audit, but I do want to say these are not unique to city colleges. The issues that I'm going to bring up, we are seeing across the board, other community colleges, other bigger colleges. So I think just keep in mind as we're going through this that the Department of Ed gave you a lot of money and not a lot of guidance. So it was a lot of money, get this money out to students as quickly as you can, and then the guidance surrounding some of that was evolving and changing over the course. So, while we are required to report these, it's not unusual. So, jumping into it, so the first 2 have to do with HERF and gear. I won't read all of this to you word for word, but just give you an overview. And I know Aretha and Richard will be up talking in a little bit about them. But essentially for HERF and gear, one of the issues that we came across was, I guess I want to also point out, there were no question costs. So nothing that we went through did we determine you shouldn't have spent it that way or you need to return it or anything like that for HERF and gear. But one of the important things with the compliance audit is that we have to be able to see documentation of internal controls. So we know that these processes are happening and people are looking at things and money's getting out and there's a process. It just needs to be better documented. So had discussions with management that we're really just looking for more concrete evidence that you're doing what you're saying you're doing type thing. So we want to see those reviews and those approvals and things along those lines. So that's really the main part of finding number 1. Again, no question costs or anything there. The second piece of it had to do with HERF, or the second finding, had to do with HERF and reporting. And this is where it gets into the guidance from the Department of Ed was changing. And your load is also heavier because you have 7 colleges to do this for, not just 1. One of the requirements that we had to do was look at the various quarterly reports that were posted for the colleges, and then also look at some of the underlying detail that was there for that. So within those, we just had issues with certain reports not being posted or certain reports posted where didn't necessarily tie to some of the underlying detail. But again, just reporting, no issues with question costs or anything like that. So again, this is just more information on, we have to list out every report we look at and whether or not it tied to detail. So then finally, the last couple findings have to do with financial aid. And again, these are only compliance findings, so nothing, nothing significant. One of the things that we looked at as a follow-up from last year was the short-term programs. And 2 students in those short-term programs received Pell Grants when they shouldn't have been. So I know, Richard will be up to talk about that. Oops. Another issue with the short-term programs is there's this gainful employment placement rate that you're supposed to calculate and maintaining documentation for that. So just we're not able to see that documentation during the audit. I think these first 2 are going to be non-issues going forward because those programs are going to be gone anyways, so I don't expect those to repeat. The next issue with student financial aid just had to do with return of Title IV funds. So this is another kind of tricky one where you have to report changes to the NSLDS within a certain number of time or with a certain number of days. The college does use a third-party service provider, and you reported that information to them, and then the next step was they should have reported it to the NSLDS, but something, for whatever reason, didn't happen there. But ultimately, it is the college's responsibility to make sure it gets to the NSLDS. So while you did what you were supposed to do, it was one of those, odd situations. And then finally, this was another repeat finding from last year, which again won't repeat going forward. One of the requirements is to have a documented direct loan quality assurance program. It wasn't completed till August, so we did just have to repeat this finding only because it wasn't in place the full fiscal year. However, now that it's in place, we don't anticipate this being an issue next year. City Colleges has gone through and provided corrective action plans, and I believe that's what Aretha and Richard will be up talking about next. So overall, just as a summary of our findings from last year. Last year, all we tested was student financial aid. 2 findings are corrected and did not repeat, and then those 4 findings that I went through, just those were repeat findings. Again, compliance, very, very minor. So in conclusion, I think it was a difficult year. There was a lot going on. I mean, just the HERF funding and the impacts that had on your staff. But overall, as usual, it was a smooth audit process. We worked closely with management and we're asking for a lot of information, and they're doing everything that they can to provide it timely. I think with all the changes, it's important to note that the financial statement was completed, a day earlier than last year. That it's better than, if it was later, it was very understandable, but everybody pulled together and got the statements issued at least at the same timing as last year. And then, as I mentioned, we'll be working with management to wrap up the single audit report, hopefully in the next week, definitely before Christmas, and the Iccb piece once that certification is done on their end. So if there's any questions, I'd be happy to.
Pardon me. So it appears that you've actually done all of the substantive work to complete the single audit.
Yep.
So tell me again what's holding up the formal completion?
Yeah, so what happens every year, the OMB, so the feds, they issue a compliance supplement. And that comes out and that tells us exactly for the single audit what we need to test and what we need to look at. They issued that in August, but then right after they issued it, it was, oh, wait a minute, we're going to issue 2 addenda. There's still changes to come, and these are the programs that's going to impact. And that first addenda was expected early fall, but in typical fashion, it just came out on Friday. So we just need to go through and finish reviewing that to make sure there's no impact to our testing, which at this point I don't think there is. And now we're able to wrap up.
Thank you.
Okay, if nothing else, I guess I'm no Maribel or. Thank you.
Mm-hmm.
Thank you.
Make sure this is working. Okay. Thank you, Kelly and Joe Evans from RSM. Good afternoon, trustees. Okay. So, I believe Kelly already talked through all these points in her presentation, so I'll skip right over it and jump into the FY21 operating financial results. Revenues were favorable to budget by $20.2 million. Expenses were also favorable to budget by $20.9 million, and this is prior to a transfer to the restricted capital fund of $34.3 million that we show in the expenses, resulting in an operating surplus of $6.8 million for the district. Revenues were favorable to budget primarily due to the following. We had revenue favorability from property taxes at $5.7 million, which includes the city TIF surplus, and PPRT, or personal property replacement tax, or corporate tax collections collected by the state, came in at $8.7 million higher than budgeted. And this is due to the pandemic, as the 2020 tax year payments were extended in 2021, which resulted in a large influx of collections for us. We had a $25.6 million upside on federal stimulus due to the HERF-2 passage. The original budget for $6.7 million was only based on the HERF-1 first round of HERF dollars before we had any awareness of any additional funding that was not accounted for in the budget. We were able to utilize additional HERF-2 dollars, as RSM just mentioned, for tuition revenue loss and other pandemic-related expenses. These helped offset the tuition revenue shortfall of $11.7 million due to enrollment decline, as well as fundraising revenue of $3.7 million, as more fundraising dollars went directly to students. On the expenses, salaries were favorable to budget by $2.2 million due to the active management of vacancies, savings in the part-time budget due to lower enrollment, and benefit costs were favorable to budget by $3.8 million. Changes to the OPEB, or Other Post-Employment Benefits Plan, generated significant savings of $5.7 million. Bad debt expense was highly favorable to budget at $5.1 million due to continued reductions in student account receivables. All other expense line items were favorable to budget due to the remote operations, low enrollment, and operational efficiencies. Total favorable expenses helped offset the $34.3 million operating transfer to the restricted capital fund. So I'll pause here for a moment in case you have any questions on the 21 results. Thank you. Okay. This slide shows the net asset value change from 2017 to 2021, broken down by three major net asset categories: unrestricted, restricted, and investment in capital assets. The unrestricted net assets improved by $33 million to negative $20 million at June 30, 2021, which falls short of the GFOA recommended minimum balance level of 5% of operating expenses, or $15 million. It is important to note that the unrestricted fund balance significantly dropped by $76 million in FY17 due to a Gatsby 75 requirement to report the total OPEB liability as an expense on our books. In FY21, total net assets increased by $10 million year over year. Overall, the unrestricted fund balance has improved by $94 million since 2017 from operations. This chart illustrates the district's operating cash balances from 2013 to FY21. As you can see, CCC had very healthy cash reserves prior to the state budget impasse, where we had to use cash reserves to cover critical capital projects, which depleted our cash balances significantly, such as in 2017, as you can see here, where the district fell below the $70 million CCC policy of 90 days cash on hand. Under the leadership of Chancellor Salgado, we've been able to stabilize our cash reserves with prudent cash management and the sale of the downtown headquarters in FY20. In FY21, the federal stimulus funding contributed to our modest increase in our cash reserves. This slide summarizes our FY21 capital expenditures as well as our plan for FY22. The FY2021 capital plan was $28.9 million, which included only critical deferred maintenance projects and required local match funds for state capital resources. As you can see, we underspent compared to budget, mainly due to the delayed expenses for OIT equipment and other projects moving into FY22. The FY22 capital budget plan totals $40.7 million, and it assumes additional state capital funding to spend at that rate. Investments in information technology continue to be a focus for us, representing 43% of the total plan, as well as critical deferred maintenance projects and investments in programmatic enhancements such as educational labs. So this is an update on our first quarter for FY22 on operating fund. As of 9/30/2021, we are forecasting a surplus of nearly $1 million. On the revenue side, we're projecting to be unfavorable to budget by $2.2 million, mainly resulting from a tuition revenue shortfall of $3.7 million based on current enrollment trends, tracking at about 5% lower than budget, which is partially offset by an upside of $1 million in property taxes from new property additions and expired TIF districts. On the expense side, we are projecting to be favorable by $3.1 million due to salary savings of about $500,000, and scholarship and waivers are tracking at $800,000 favorable due to enrollment declines. Bad debt expense is expected to yield about $1.5 million in savings as we continue to have lower receivable balances, and other expenditure categories are tracking a budget as of today. Next is our review on our credit rating. So we have good news to share on this front. In 2021, S&P and Fitch credit agencies reaffirmed CCC's rating of A+ and BBB respectively, but revised the outlook from negative to stable due to CCC's strengthened financial position and certainty with our state budget. Okay. So this section will summarize in detail the 6 financial audits that Kelly just referred to in her presentation. And I will call up Richard Hayes, ABC of Financial and Scholarships, and Aretha Tharps, District Director of Student Finance, to cover the section.
Good afternoon. How y'all feeling? Y'all feeling good? I feel great because I ate the last piece of pound cake that my wife tried to hide in the vegetable drawer. She put it in the vegetables because she thought I wasn't going to look in the vegetable drawer, but I found it. So I'll be in the doghouse, but I'm at least be happy while I'm there, okay? And so today we're going to talk about our action plans for the federal audit. Strap in, we're going to have some fun today. I got on my Chicago socks, which has pizza and hot dogs on it. That's what I'm eating for lunch. All right, so we're going to have a little fun, and I have my colleague here, Aretha Tharps, which is also my partner at the district as we go through all these financial audits. Feel free to stop me and ask any questions that you want. More than happy to answer the questions. So the first finding is for HERF, which RSM went over about our internal controls. And so as we was pushing this out, we tried to get it out to our students very quickly, and in that, we were sending a lot of emails, but we didn't have any documented processes. But effective immediately, we have already put in a review and control process workflow in which we are doing right now. And we're going to be continuing that same process for all of our HERF disbursements moving forward. So that's our action plan to make sure that we try to make sure this is not a repeat finding next year. We have those review controls already in process right now. The second one, which is again HERF, talks about our quarterly reports. Now, I do want to say that we did reach out to Department of Ed, which I have a great relationship with, and they have given us clearance to amend our report. So for any report that was inaccurate or any report that had some inaccurate information, they gave us the opportunity to amend those reports. So we have quarterly reports, and we also have an annual report in February of 2022, which we will go back and we will correct our first annual report. So we have already posted those reports on our financial website. So as you know, we move pretty quickly to make sure we get this done in a very quick manner. The next one is short-term programs. Now, we have 2 short-term programs here. Computer numerical machines, and also the the cosmetology 500 certificate at Truman College. And so the CNC is projected to be sunsetted in FY22, so I'm working with the academics department. So we won't have that program moving forward, but I will keep the district updated on it as well as the provost as soon as that is sunsetted, so we can make sure we have all the proper things in place. But in addition to that, I'm also working with the research people at the campus to make sure we have the proper documentation in the event that we still have to talk about this next year. So we have a plan and a contingency plan. You got to have a backup plan as always, all right? Again, on that same vein of short-term programs, we also had 2 students who got the Pell Grant, which we've already returned, but we made sure we did not have student-friendly fire. Okay, so we was able to return the money, but we was also able to cover the balances for the students. So the students are not affected in the situation because they are our #1 priority. Our next finding. So before we get into this, I want to take a small trip down memory lane, okay? Let's talk about some good news, all right? The fact that, I'm wearing this nice suit up here. Good news, all right? In 2019, when that came on, we had 7 audit findings, all right? 2020, we went down to 6 audit findings. And then currently we're at 6 because of HERF. Fortunately came and reared itself in front of us, but it did help us out. But we had 4 student financial aid audit findings. Now, the top 10 audit findings that we run into, of course, is R2T for disbursements, verifications, we don't have those audit findings anymore. We have corrected those. Those haven't came up anymore. So that is good news because we do a lot of R2T4s. Those are student. Well, let me stop talking the financial aid jargon. Return to Title IV. R2T4 for short. But that's when a student drops all their classes and we must send money back to the federal government. So we get a lot of that happening a lot with our community students. So we have to make sure that we're documenting those processes and we have to send it back within a certain time period, which is 45 days. So we have done extensive training on that, professional development, and now we're getting that done within 16 to 30 days now. So we didn't have that audit finding. Verifications. We all have heard about verifications. That's when a student completes the FAFSA and they have to submit additional documents based on that FAFSA. That's not an audit finding. So those are really good. That's really good news for us to make sure that we are moving in the right direction to keep decreasing these audit findings. And as long as I'm here, I'm trying to have 0 audit findings. That's the plan. That's the plan. That's what we're trying to get to. One is too much to me. I don't know about y'all, but 1 is too much. I want to get rid of all of them. All right, so moving forward, all right, this finding right here was for enrollment reporting. We submitted the information to NSC. It didn't get over to NSLDS, but we have already worked with our register office at the district to come up with a reconciliation process to make sure all data that we submit is looked at and make sure it's translated over to NSLDS in the time that it should so we can avoid having this being a repeat finding. And this is also this is probably the number 2 finding that all institutions across the nation run into with enrollment reporting. The next one, the last one, me and RSM, this was gonna be gone, but we had conversation about this one. So now we do a biannual review of all of our policies, financial aid manual, as well as our direct loan quality assurance. So I can assure you that this will not be here next year. So the fiscal year starts, and I'm gonna tell you what happened. My year starts in August with the academic year, but the fiscal year starts in July. So 1 month, we didn't have it in place, and so that's where this finding come up. But now I'm very aware of that fiscal year, so we won't have this problem moving forward. Questions? Oh.
Good afternoon. I also want to just add additional good news regarding the reporting audit finding that RSM noted. I want to also add the fact that we did hire staff that will be monitoring Department of Ed correspondence as well as compliance. So again, we don't expect the timeliness and accuracy of the reporting to be a repeat finding. And we did, as Richard indicated, we did put in place the internal control document, which requires a signature of an individual who has acknowledged the review of data and or reporting, as well as the approver to acknowledge the reporting and or data submitted. So thank you, RSM, for bringing that to our attention.
Thank you very much.
Thank you.
So I believe that's the end of our presentation, unless you have any additional questions that I can address. This concludes the presentation. Thank you again for your time.
Thank you, CFO Rodriguez. We will now move on to review the items proposed for board action at the December regular board meeting, which will take place after this meeting at 2 p.m. Will the chief advisor please proceed with the review of the board reports?
Thank you, Trustee Williams. For our presenters, please proceed one after the other, briefly pausing to give trustees an opportunity to ask any questions they have about the items presented. We will begin with resolutions. CFO Rodriguez will review resolutions 1.00 and 1.01. President Sanders will review resolution 1.02 and 1.003. President Jackson will review resolution 1.04, and CTO Dunning will review resolution 1.05 and 1.06. Please proceed.
Resolution 1.00 is for the approval of the CCC FY 2021 external audit, which was completed on November 29, 2021. The audit is required to be completed by December 15 per the Iccb. We receive a clean opinion on our financial statements. After approval by this board, we will file with the City of Chicago and Iccb. Resolution 1.01, this resolution is for the approval of our annual property tax levy. The amount of the levy was approved as part of the FY22 annual budget, and it includes an increase to the property tax cap, new property, and expired TIF districts. Subsequent to approval, we will file with the county clerks of the County of Cook and DuPage. Thank you.
Resolution 1.02 is a request to the board to authorize a lease agreement with Gift of Hope Organ and Tissue Donor Network for the sum of $1 per year for an initial 10-year term to offer health science programming at the Gift of Hope Community Partnership Center located at 7936 South Cottage Grove in Chicago. Gift of Hope will provide the district with an improvement allowance of $1.5 million for furniture, fixtures, equipment, and infrastructure costs, which will be repayable if the district terminates the lease for convenience within 3 years of the lease commencement date. After the initial 10-year term, this agreement carries 2 5-year renewable options where the district would be responsible for 40.18% of any increase in operating expenses incurred by the landlord in each calendar year of the renewable term. Resolution 1.03 is a request the board to authorize payment to Castle Branch Incorporated the sum of $1,824 for background checks related to clinical experiences that did not occur in the spring of 2021 due to COVID-19. 18 students were issued refunds from Castle Branch due to the students' inability to take advantage of the pre-scheduled work-based learning. This request is to authorize reimbursement to Castle Branch for the refunds issued since Castle Branch did complete the background checks.
.04 is an agreement between the Board of Trustees, the Department of Family Support Services, and the Illinois Network of Child Care Resource and Referral Agencies. We are seeking approval for a 1-year extension and increased investment of the intergovernmental agreement with the Chicago Department of Family and Support Services to support the ECE scholarship. The term of the extended agreement will be from January 1st, 2021 to December 31st, 2022. The increase in funding for the DFSS agreement would be a total of $4,330,736.34. In addition, we are seeking approval to extend the term of the INCRA sub-agreement with the Illinois Network of Child Care Resource and Referral Agencies by an additional year and increase the funding available under the INCRA agreement from $2,060,330 to $4,586,315.40 of new funds. The initial agreement, just for background, CCC and DFSS initially entered into a 1-year agreement that was effective January 1st, 2019 through December 31st, 2019, and then that was extended by 1 additional year from December to December 31st, 2020.
Resolution 1.05 is a request for approval for the Chancellor to recognize the efforts and dedication of City College's employees during the challenges caused by COVID-19 during 2020 and 2021. This approval authorizes Chancellor to give all currently active full-time employees that were also active as of September 1st, 2021, 3 additional personal days to be added to their personal day banks to be taken prior to June 30th, 2022. It also authorizes a lump sum payment to all part-time employees that were actively employed as of September 1st, 2021, and also worked between September 1st, 2021 and December 4th, 2021. This payment will be calculated based on their hourly rate times 8 hours and will be paid on January 28th, 2022. Resolution 1.06 is a request for approval to extend and modify the COVID sick leave policy that was established in July 2020 until December 31st, 2021, unless revocated by the board prior to that date. Resolution 1.06 also extends authorization to the Chancellor upon receiving prior approval of the Chair and the Vice Chair or their respective trustee designees to approve temporary policies that revise or replace the Employee Manual, Student Employee Handbook, Academic and Student Policies, Sections 410, 411, 413, and 910 of the Board Policies and Procedures, and the COVID sick leave policy. This authorization will be valid until July 31st, 2022, unless revocated by the Board.
Thank you, CTO Dunning. Please review item 2.000, the personnel report.
Board item 2.0 is a request to approve the December 2021 personnel report. There are 135 actions on this month's report. They include 33 new and rehires, 77 promotions, title, and salary changes, and 25 separations and retirements. This concludes the December personnel report.
Thank you. CSO Varela, please review item number 3.00 and personnel.
The December development report includes 4 grants funded and award totaling $80,000, 30 grant applications submitted totaling $3.9 million, and in-kind and monetary donations totaling $114,550. Included in the 4 grants awarded are 3 grants that will support individual college efforts, one from IBHE for a nurse educator program at Malcolm X, one from ECMC Foundation to support Wright's existing food pantry, and another from the Fannie Wurlitzer Foundation for Daly's College Music Technology Lab. We were also awarded a grant for the Intelligent Community Initiative to support wellness centers across the district. This concludes the December Resource Development Report.
Thank you. We will move on to the agreements, which will proceed as follows. ABC Anthony will review agreement 4.00. President Hollingsworth will review agreement 4.01. And Provost Potter will review agreements 4.02 through 4.04. CTO Dunning will review agreements 4.05 through 4.08. CFO Rodriguez will review agreement 4.09. Please proceed.
Agreement 4.00 requests the board's authority to execute a depends upon requirements agreement with Second Chance Cardiac Solutions Incorporated for the purchase of automated external defibrillators, as well as to provide training on those AEDs, as well as CPR and first aid training for the period starting December 9th, 2021 through August 21, 2025 at a total cost not to exceed $200,000.
Seeks board authority to enter into an agreement with Bus and Truck of Chicago, Inc. to provide equipment services, maintenance, and repair as detailed below for Olive Harvey College CDL training vehicles, which includes 20 auto diesel vehicles, 10 trucks, 1 RV, 6 trailers, 4 forklifts, and 1 really small plane for the period commencing no sooner than December 9, 2021 through December 8, 2024 at a total cost not to exceed $300,000.
Agreement 4.02 is with SHI International to provide city colleges with licensing to MZ Skillaby software. Skillaby is a labor market data scraping software that maps skills that employers are looking for and identified in job announcements to skills that are found in the content and outcomes of courses and programs. The tool will allow city colleges to maintain regular and ongoing review and updating of programs, primarily in career and technical fields, for quality and relevance. This board action, which amends Board Report 34185 from March 4th, 2021, will extend our agreement from April 30th, 2022 to July 31st, 2022 at no additional cost. The total cost of the agreement remains $48,000. Agreement 4.03 authorizes renewal of an agreement with Blackboard Incorporated to provide Blackboard Ally a tool that aids in ensuring ADA compliance of instructional materials that are uploaded to our learning management system. Ally will support faculty as they upload content, flag materials that are not ADA compliant, and provide options for resolving the issues. Ally is also a tool that we can use to audit materials across the institution to ensure greater levels of compliance. The renewal will extend through December 31st, 2022, at a total cost not to exceed $68,000. And Agreement 4.04 authorizes a rental agreement with McCormick Place SMG to lease the Wintrust Arena for City Colleges of Chicago district-wide commencement ceremonies that will celebrate our associate degree completers' accomplishments in spring of 2022. The requested authorization is through May 31st, 2022, at a total cost not to exceed $250,000 with 2 one-year renewal options.
Agreement 4.05 requests the board's approval to execute a renewal agreement with Caremark LLC to manage the district's prescription drug plan under the PPO medical plan for the period from January 1st, 2022 through December 31st, 2022, at a total administrative fee cost not to exceed $7 million annually. The original term of this agreement began on January 1st, 2019 and expires on December 31st, 2021, with 2 options to renew for 1 year each. This agreement is utilizing the first renewal option and is compliant with MBU WBE requirements. Agreement 4.06 requests the board's approval to execute an agreement with Employment Background Investigations for background checks and pre-employment screening services for the period from January 1st, 2022 through January 1st, 2025, with an option to extend for an additional 2-year period at a total cost not to exceed $500,000. EBI was chosen through an RFP and is in compliance with MBE WBE requirements. Agreement 4.07 requests the board's approval related to a renewal agreement with Sapphire Digital for the period from January 1st, 2022 through December 31st, 2022, at a total cost not to exceed $10,000. Sapphire provides administrative services for their member rewards program called Health Advocacy Solutions that gives participants the ability to earn rewards resulting from actions that reduce claim costs to city colleges. This program is run transparently through the Blue Cross Blue Shield PPO Group Medical Plan. The original term of this agreement began on January 1st, 2021 and expires on December 31st, 2021, with 4 options to renew for 1 year each. This agreement is utilizing the first renewal option. City Colleges has recommended a waiver of MBE WBE compliance due to the nature of the administrative services for members reward program and the absence of subcontracting opportunities. Agreement 4.08 requests the board's approval to execute an agreement with Vision Service Plan to provide services for the district self-insured group PPO Vision Plan for the period from January 1st, 2022 through December 31st, 2024, with 2 options to renew for 1 year each at a total administrative fee cost not to exceed $90,000 annually. Due to the self-funding nature of this agreement, the total cost does not include the actual claims submitted by VSP for employees and paid by city colleges. The agreement is stemming from a joint purchasing agreement with the City of Chicago and recommends a waiver of MBE WBE compliance due to the nature of the administrative services related to Vision products and a review of the vendor's statements to its diverse supplier program.
Agreement 4.09, this is a request for an amendment to Board Report 33540, adopted on August 3, 2018. The agreement is with Anaplan Inc., which is the first ever budget management system utilized by CCC. The term of the agreement shall commence on August 3, 2018 and end on September 16, 2023, with an option to extend for an additional 5 one-year periods. We request an additional $350,000 in spend authority to cover the annual software licensing and system maintenance costs, as the initial implementation costs absorb more dollars than planned due to enhancements currently utilized by CCC. This would be at a new total cost not to exceed of $2,177,480.
Thank you. We will move on to purchases, which will proceed as follows. ABC Anthony will review purchase 5.00.
Purchase 5.00, request the board's authority for the monthly job order contractor construction projects to be performed by the listed contractors. Board reports 33312 and 34067 authorize the utilization of JOC as a construction delivery method to perform renovation services, deferred maintenance, and repairs. This month's report lists 4 projects for a total cost not to exceed $400,985.16.
Thank you. General Counsel, please review item 6.00, the payment of legal invoices.
Item 6.0 requests approval of legal fees totaling $340,497.73. Such fees cover litigation, labor, employment, corporate, and higher education matters.
Thank you. Trustee Williams, pending no further questions, that concludes the review of the board.
Thank you, everyone. May I have a motion to discharge the December 9th, 2021 board packet, inclusive of the resolutions, personnel items, resource development report, agreements, purchases, and legal invoices included on today's committee agenda as part of the consent agenda to the December 9th, 2021 regular board meeting.
So moved.
Second.
All in favor?
Aye.
Any opposed? Motion carried. Thank you all. As there is no further business to come before this committee today, may I have a motion to adjourn?
So moved.
Second.
All in favor?
Aye.
Motion
Aye.
carried. We are adjourned. Didn't even get to hit my gavel.